All right, so who am I speaking with here today?
Yeah, my name is Kathlyn. I'm from Malaysia. We are an educator on financial markets, so we teach people how to invest and trade safely. And my primary focus is trading the US market as well. I've started trading since 30 years ago.
Wow.
Okay.
How did you get started trading yourself?
I got influenced by my colleague. Yeah, I used to work in AMD, and one of my colleagues likes to trade stocks. And during the break time, he will be sharing with me about stocks. And after 5 years working in AMD, I moved to Intel. I worked there for 12 years, and I was granted Intel stock options. So I have to figure out when to exercise my shares, and that's what got me started in the US market as well. Yeah.
Wow. And so before you do enter a trade or a longer-term investment, what are some strategies or indicators that you use yourself?
I'm more focused on price action rather than indicators, although I do use some EMAs. I'm a hybrid person. I would say I focus on strong fundamental growth stocks, and then I use technical to time it. Yeah, and my exit strategy will primarily be technical. Yeah, because if you use fundamental, it'll be too late. Yeah. So I do 60% of my portfolio is on the long-term to mid-term, and 40% is on intraday trading. I love intraday, and I trade 80% of my overnight positions are using options. Yeah.
Oh, fantastic. Okay, so then you also mentioned that you have an educational course to educate students on investing and trading. So what's some advice that you have for a newer investor or a newer trader out there?
So I think don't be so afraid to get started as long as you start safe. First of all is to make sure that you start using paper trading to understand how the market works. And I strongly believe that everyone should learn how to invest safely, and going through a course will help better to overcome the mistakes made in the market, right? Because there's a systematic way to approach the market. But always start with paper trading and focus on risk first before you talk about reward, yeah?
That definitely makes sense. And now, last question. So what are your current thoughts on the market and for the remainder of 2024?
Yeah, so I don't have a crystal ball, right? After trading 30 years in the market is very dynamic. So whatever I say today is very data-driven. Based on the last few months' inflation data, the inflation is still not within control. So I don't think the Fed will cut interest rates soon. Initially, based on the last FOMC, there was an anticipation based on the CME Fed Watch on 3 cuts, which I don't think is going to happen. Probably we'll get a 1 or 0 cut. And based on that, we need to be more cautious in terms of buying, because I think the market valuation is still very high. And because people are not anticipating a potential cut so soon, it will be vulnerable to bad news. But there are still great, strong fundamental stocks whenever there's bad news, I will still go into strong fundamental stocks. But I would say it would be more on consolidating sideways for now, unless there's some great earnings surprise. So I think people are looking for, despite all the geopolitical tension, the inflation, are the companies still making money? Yeah, so I'm not too optimistically bullish. I would say cautious market. Yeah, more or less on the consolidation. I would say look for strong support, especially if you're an investor. Look for weekly support level like EMA20, and also strong horizontal support. If you're a trader, that's fine. You can trade up and down on the intraday. So for the meantime, I do short-term trading intraday. Yeah, so waiting for the right daily chart support and weekly chart to enter into longer-term positions. Yeah.
Awesome. And then last question here. So for 2024, obviously this is not financial advice, but do you believe that there are any stocks that are currently undervalued, and what would your go-to stock of 2024 be?
Okay, so I typically don't like to give tips. I would say that if you go for some of the safer one, will be a subset of the Magnificent Seven, like Microsoft, because it's more diversified in terms of the different source of income. Yeah, so one of the more resilient one is everyone use Microsoft. More people are using the laptop. 90% is on the Windows platform and Windows Office. And they are also into AI. But one of the areas that we need to be cautious of is the spending on AI, right? So for this earnings season, we have seen from some of the announcements like Meta, they invest a lot on the infrastructure, even though their business is doing well. So that will hurt their income in the short term. Yeah, so that is something that we need to be cautious in the current earnings announcement. But whenever there's a setback, like for Meta, I think it's a good opportunity. They're still a very solid long-term stocks. Yeah. And all these Google, Meta, Microsoft, I think it's a safer one. Or if you want to go into semiconductor, I think the safer way to invest in semicon is using SMH. Yeah, it's more diversified. Other than that, I think the discretionary spending, I'm still very cautious. Yeah, because people are tightening spending due to the interest rate is still high. One of the sector industry that will benefit from interest rate hike is financials. So you can see the broker stocks doing well because they make better money when the interest rate is high. Yeah, financials. Yeah. So that's one of the areas you can consider.
Awesome. Yes. Thank you very much.
Okay, great.
It was a great meeting.